Hi, I'm Jimmy. In this video, we're going to run quickly through my personal investment portfolio to see where it stands today. Now, I've made a few changes to my investment portfolio and I want to share that with you. Plus, we're going to look at each individual stock to see what the fair value of that stock could be to see if it's worth adding more shares at the current price. So the first stock that I bought was Disney. I bought this back when COVID first happened and the stock took a big dip. My average price was just below $100 per share. Right now, the stock's up above 150, so I'm up about 57% so far. This stock represents a total of 12% in my current portfolio. Now, when we switch over to our fair value calculation for Disney stock using discounted free cash flow, well, right now we get a fair value of the stock of about $119 per share. Again, Disney's trading at about $150 per share, so at the current price, I have no interest in adding more shares of Disney stock at this time, even though I do like the company. Now, just to let everybody know real quick, we're actually in the middle of building a website. We're moving along nicely with it, and it's going to look something like this. And basically the goal for this website, which should be up in the next 5 or 6 months, well, one of the goals is to allow us to quickly calculate the fair value of different stocks, just like this. Super quick and easy using analyst estimates. So we've already negotiated how we can get analyst estimates for a ton of different stocks from all around the globe. So ideally, just punch in the ticker and the website automatically calculates the fair value using discounted free cash flow or revenue or a whole bunch of different other valuation methods. I will leave a link in the description below how to sign up if you're curious. And if you sign up today, we're locking in the price. So the price will never go up on you once you sign up. So again, I'll leave a link in the description below if you're curious. Okay, so back to my investment portfolio. Now, our next purchase was Intel. Now, I bought Intel at an average cost of about $46 per share. Right now, I'm up about 20% since I bought the stock. And we can see that Intel is currently about 18% of my total portfolio. Then when we go check out the fair value of Intel's stock using discounted free cash flow, we can see that Intel comes up slightly undervalued today using a 7.5% required rate of return. But for a stock like Intel, which I think has big potential over the long run, but it needs to make some improvements to its underlying business, which is probably why it's discounted from a value perspective right now. So for me, I need a bit of a bigger margin of safety. I like the $45 or so price that I was able to get in at. Up here at 55, I don't like it nearly as much. I'd like to see this one pull back before I consider buying any more. Okay, so the next stock that I bought was Lockheed Martin. I bought Lockheed Martin back when the stock was about $336 per share. So far, this stock's up about 9% for me. And then when we switch over to our fair value calculation using discounted free cash flow, well, it looks like the stock could be a bit undervalued. Now, when I personally bought Lockheed Martin, well, my thought process was that the stock market seems like it could be overvalued. The stock market in general looks like it could be overvalued. And Lockheed Martin is a defensive type of company, and I thought this could prove to be quite useful over the long run if we were to have a big pullback in the stock market. But with that in mind, I knew I also needed some additional growth in my portfolio. So my next purchase was to go ahead and buy Alibaba. Now, I bought Alibaba back when it had dropped below $180 per share. And much to my surprise, Alibaba's stock just kept falling. So just recently, I actually increased my overall position in Alibaba just because the price looked so interesting. And I was hesitant to do it because I know there's risks with Alibaba, but the price was just so low. So I bought my shares, the new shares, at about $117 per share. Either way, it decreased my overall average cost to about $142 per share. This means that total, I'm down about 6% with my entire position, given where Alibaba stock is today. Now, for me, this is a long-term buy and hold stock, so I'm not too worried about being down right now. I think in the long run, this stock has a lot of big upside potential. And then when we switch over to our fair value calculation for Alibaba stock, well, we get a fair value of about $230 per share. That's using a 7.5% required rate of return. Even if we used a 10% required rate of return, well, the fair value should still be north of $160 per share. And this is one of the reasons why I wanted to buy more shares, because when it dropped below $120 per share, even using the company's own cost of capital, well, the stock still seemed fairly inexpensive and looked like it could really be a good deal. So ultimately, that was the reason why I jumped in and bought additional shares. So over the long run, I think Alibaba could be a good long-term buy and hold. Okay, Then in the past month or two, another stock that I bought was AT&T. Now, I paid about $25 per share. Again, it was about a month or so ago. And the stock's up about 8% total return since I bought that stock, which is decent. Although for me, I'm interested in AT&T. One of the reasons I liked AT&T is that they're spinning off their Warner Media business, and investors will get a piece of the Warner Media business. And between that and some of the fundamental changes they're making to their company, they're lowering their dividend. They're going more to a core type of business. And they've also said they're going to pay down their debt a bit. And when we switch over to our discounted free cash flow, well, we can see that AT&T stock looks like it could be a bit undervalued. We got a fair value of about $30 per share. But the reason why I bring this up is the debt down here is obviously quite huge. The company has said that they plan on decreasing that amount of debt over the next year. So I think that that could add some value to the company, which is one of the reasons I jumped in and bought it. And again, this is another long-term buy and hold investment for me. So I have no intention of selling it or buying any more shares at this point. At this point, this position is large enough for me. Now, I did a whole video on AT&T and the spinoff that they're doing, because this discounted cash flow calculation actually doesn't quite do it justice. It's a bit more complex than this because of the spinoff, and investors will be getting a piece of the new deal. So I'll leave a link in the description below to that video if you're curious. Okay, simple enough. Now let's switch over to my most recent purchase, and that was Activision. I got Activision at about $63 per share, which is about where it's trading so far. So at this point, I'm about break even. And then when we jump over to our fair value calculation for Activision stock, well, using a 7.5% required rate of return, we get a fair value of about $100 per share. Even using a 10% required rate of return, we get a fair value of about $70 per share. So overall, I'm very happy with this position and how it fits into my overall portfolio. They've got some fundamental problems with the business that I think that they can turn around if management applies themselves. So I'm optimistic that they will do that. But again, I did a video on that if you're curious. Now, if you're curious about the steps that I use to research and try to value companies and try to better understand the business, well, I actually did a video called 8 Steps to Analyze a Stock. So if you're curious, perhaps that's a good next video for you to watch. Plus, you can sign up for the website if you'd like. I will leave a link to the website down here, link to the video here. There will also be links in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.